Greetings, positive trenders. I hope everybody's having a blessed weekend, and here we are. I'm really excited. Today is the next edition of the Positive Trends newsletter, and in this edition, we are going over the Go bar, aka the blue bar, at our key level. So it is a awesome strategy. So we're going to go over that today. It's going to be great, and then I'm also going to do a separate video that explains, how to put, the watch list. To update the watch list to include whether a blue bar or a go bar is forming, things like that, and also updating our. I'll do a whole separate video, and then just kind of going over the strategy separately. So there'll be kind of just a one of those go-to videos for everybody. So, but in the meantime, let's just kind of take a look and see where we're at here. So we talked about this yesterday at the close. So far on the monthly chart, with the SPX, we are red spinning top right off of the spinning top push off of the upper monthly Bollinger Band. But still, this is nothing to really be worried about. We're still above the mid Bollinger Band here in the monthly. You saw we had one push down to it recently, and then we came right back up. So right now we're just kind of in the midst of it. It's August, right? It's volatility is really high right now. It's the volatility of the VIX has been high, so it's made it for a very challenging week. There's been lots of geopolitical news coming out, so it's been really challenging, but we've still managed to put green trades on, so that's always good. Weekly chart here, you can see we are below last week's close. We had a nice hammer that we were working above the mid Bollinger Band on the weekly chart, and we're still below that here. So the weekly chart, we'll see it. It does have bearish implications, and we still are below this kind of macro downward trend line. We kind of start off the newsletter here, just kind of going over where we're at in the market, and this is basically this is what we can see right here. So we've pushed back into the daily cloud. That's a good thing. That can have bullish behavior. We kind of have a sort of a morning star setup, except the real body of this would have to have been below this candle. So that did leave an open gap right here, which is kind of scary, right? So we have an open gap here now, and we have an open gap here now. This is actually a closing gap here, and we have an open gap and a closing gap here too. So, but we are pushing into the cloud, so that could give us a potential move up to this downward trend line. But this is the macro trend right now. So we've got let's look at this week. We had that big down move, the week before, and then last week was just this up and down and up and down, just some crazy price action. It made for challenging. We didn't put a lot of swings on this week. The ones we did do, like Procter & Gamble, were great, but it was just tough to put on swings, with the volatility so high. So we saw that. One other thing we saw that was pretty interesting this week too, and I pointed it out, was the quadruple inside 60. Right here off of the that big move that day, right? Remember Apple leading the market up here. It actually also came up off of that 60 anchor too, so that was a strategic opportunity through here. So that actually gave us a go bar on the 60 chart. Now I do want to say before we get into it that the go bars are primarily for the 5-minute time frame. Okay, they're most effective there. Okay, when you try to turn them into swings off of larger time frames, it just doesn't work out quite as well. So so the focus is on the 5-minute time frame, and that's for us for day trading. Okay, so looking for those alerts intraday, that's pretty much where they're going to be coming from, right? Unless we see another some other setup that's kind of occurring. So pretty good stuff. But really important thing here, just want to point out that we did have a go bar here, right? Then followed by 4 inside bars, right? 4 yellows, and obviously that's going to what we talk about in the newsletter a little bit is that if we have a yellow blue, right, on the 5-minute chart tends to bring some movement, but here clearly this gave some movement. I talked about a straddle, and it was just very interesting that at the open we really gapped down and kind of pushed down. Those straddles were more than double on the SPX there. So I just kind of wanted to point that out, just showing that we had the outside and quadruple inside on that. Okay, we talk about little things about the yield curve being inverted and other clues into the market being full of fear and all that stuff. So we just have to be careful out there. But these go bars are great, guys. So let's take a look here. The first one I want to point out, and I basically just go through that through the introduction, is just talk about the go bars. So let's take a look at NVIDIA here on Friday. So if we go to here's the key, guys. The go bars are great, right? They're outside bars. That's it. That's all they are. The yellow bars are inside bars. The blue bars are outside bars. But the interesting thing is the reason I never really took them into too much notice is I used to think that when I saw one that I missed the move, right? 'Cause I'm always looking to just get in at that perfect opportunity, right? And miss the move. But what they are is they're ready, set, go bars, right? That's why I call them go bars. And so so we could see here on NVIDIA that they're they definitely come into play. But what we want to do is look for them at our key levels. Okay, so one of the main things is these key levels is we load them up with our floor pivot scripts, which we have in the script box. I'm going to do a separate video, kind of just going over that, going over the whole strategy again. But right here you can see we have one go bar that actually pushed through a level, and I tweeted this out saying it might be looking bearish, right? But it turned out to be bullish, and the actual entry here was right at this bar right here. So we never got a trigger on it until here. Now it looks like it triggered down, okay, on the stock chart itself, but the real key is to go to the option chart and see what happens. And so we talk about that a little bit more in the newsletter, and we'll look at that in the strategy video later. So so the puts actually never triggered, okay, but the calls did, and they triggered here, like basically on this bar. So the entry is here, is slight, a little bit of a bull flag, right, and then continue to go up. But keep in mind here, we were already starting the trend to the upside, right, because we had this downward trend line right here. We had a go bar right here, right off of the downward trend, which is our minor pivot line. So we had already started the trend up, and unless it wanted to trend back down, right, the new trend was up. Okay, so that was another kind of clue into the whole thing. Okay, so we talk about that. From there, it's all about finding confluence on the option chart. And what I've done in the newsletters, I've shared my 5-minute chart here, and I've also shared the 5-minute option chart as well. And so you can import those into your Thinkorswim. Okay, so you have the same type of setups that I have. And I also show how I put the floor pivots in, and the link to where the floor pivots are on the Google Drive. Okay. Just another example I wanted to show you too is that these occur all over the place, right? But we were looking for key entries on it, and that's why we need to use the option chart for confluence. Okay, so just a real quick example, was on Boeing, right? So from Thursday. So if we go to Boeing right here, you can see, and it gave some, some interesting price action on Friday as well. But if we go to Thursday's chart, right, we can see there's go bars all over the place, right? These blue bars are all over the place, right? So, but we want to look for them at key levels, right? And so here we can see there was a nice tag at 10:30 of this this key level midpoint line. Okay, so that was the entry bar right there. It also signified a minor break of this this downward trend line too. So we were seeing that trend was changing. And then what we do is we can look for confluence on the option chart. So if I go to the 322.5 C's at the 10:30 bar right here for Boeing, let me just type that in right here. So .BA 1908 16C, and then when I say 322.5, okay. And so what that'll do is we'll take a look here on Thursday and see what that did. And here we are. So this was the 10:30 bar on Boeing, and so that gave us an entry here at 246, right? And we put a stop here below the $2 at the low of the go bar, right? And our entry was here. So we had a little bit of a move here. So 50 cents right there, no problem taking 50 cents. We had a pullback, right? But nothing to be worried about because it didn't stop us out, right? And so this would continue to go up here. So the entry was again $2.40, and this came all the way up to $4.80. It gave one more pullback and then continued up. But interestingly enough, at 1340, I believe there was another go bar there. So let's take a look. So the first entry was there, and the second one was at, let's see if they gave us one. I can't remember off the top of my head. Yeah, it wasn't quite confluence there, so we wouldn't. This was that wasn't confluence there either, so that wasn't actually an entry. So really, the move was from here to here, and then we would have looked for a potential new entry here. There actually was a good put play right here. Now we do have to be careful. I want to give 2 warnings. Okay, 2 warnings on these go bars. Okay, watch out for dojis. They can work. They can be good reversals, but they could be pause bars, right, in another direction. So just use caution with dojis. Okay, and also I brought into consideration Roku. Okay, so Roku on Thursday gave a go bar here. Okay, so is doji spinning top right here, okay, at this key level, right? And it got really tricky because it broke down, right? And then it went up, and then it went down. Okay, so I show in the newsletter actually that there was no confluence on the option chart. Even this is a very, very nice bar right here for trading, potentially the common shares, but there was no confluence on the option chart on this candle. This is a beautiful move, but no confluence. And again, there's no confluence here either. So we don't see confluence in the option chart, and you'll see that, like we just looked at on Boeing. There's it's no go, right? So so we move on. We look for other setups, right? And so what this does, it keeps us out of the majority of trades during the day where we're like, what are we doing? And it also gives us excellent setups. So let's take a look at Netflix. So Netflix on Friday, you may recall that I tweeted out a short, and then I tweeted I was like very fast. It's risky because it's Friday because it's expiration day. Now when we do these during the week, we should get a little bit more kind of controlled moves where we can kind of trail bar by bar. But if we go here and we kind of scroll in, we can see on Netflix that we had a nice go bar, and there was also some confluence, not confluence, but we had a yellow blue, right? We had an inside outside, and that actually is a good signal for more movement. Okay, so we showed pause, and then we had a go bar, and then we shorted it. So that's where I posted that that trade on Netflix, and then it came here and it paused down. I was hoping it'd break down a little bit farther, but it didn't, right? Just kind of went there. So still, it's decent. Profit is profit, right? And we take it any chance we can. So that was pretty key right there. And then there was confluence, of course, on that part, and I showed that in the newsletter as well. And that was a good trade. And then let's see. So what else? SPX was key too. We looked at this on the and this I've also updated the SPX trading plan to only include these go bars. It's basically everything that we've been working on, all these pivot levels, all our signals, all our trend lines, but using the go bar, and that's the way to do it, right? We looked at this at the open at the live stream the other day. Remember we drew this bull flag right here at the S3 level, right? That's your monthly, significant line. We also had a midpoint line there too. And this was your key bar right here, and I show in the newsletter, how we could have entered that. And there's a couple ways you could do it. If it goes this was a fast bar, right? It moved really fast. Sometimes we could have stop entries, on these trigger lines too, and then to get an entry instead of missing the trade. So very, very good stuff on that. So I definitely encourage reviewing those, reading through that and going through those. Other things with the go bar too is not as much backtesting, but they are interesting, and there's trades for more aggressive traders. And let's actually go back here. Let's go back to SPX real quick. In fact, let me do the .SPXW 190816 calls, and we'll look at the 2880s. Okay, so just to show you what it did on the option chart, what I do is I go through and I talk about a couple different methods that you can use if you're an aggressive trader, right? These are not ones that we're necessarily going to be tweeting out. If I do, I'll say aggressive or something like that, right? So what we look for here is the confluence bar right here off of that bull flag on the SPX chart, and as you can see, I drew this level right here where the entry was. So it's right here. So we would have entered right here at about like $4.30, $4.25, and moved all the way up to like almost $8 right there before giving another bull flag, and then up to almost 14. So you can see why I have the SPX plan, in place. Now, what we can do also as traders, if we're aggressive, is we can use these go bars without even looking at the common chart. Okay, and it's really risky, and so that's why I say you have to be very, very aggressive, and you have to kind of gauge the price action, right? But they can give nice moves just using those bars without even looking at it. So that's just one thing I wanted to comment on too. Okay. But we are going to be posting trades with confluence, okay? It's very, very important at those key levels, okay? Because otherwise, we need a system, and we have to have consistency, right? Okay, so from there, I want to look at Beyond. So Beyond also gave an opening bar. So the past couple days, it gave an opening bar, which is a go bar based on pre-market data. Okay, and so that the other day, right on Thursday, right, we had that huge move down right off of the go bar at the open. So I thought that was very significant. We actually saw it did the same thing on Friday. Right, we had a go bar at the open, and then a nice push down at the open as well. And then it found some support. It looks like the prior day's lows, and then came up. But those are really, really key stuff. Here was a go bar right here, nice reversal bar. I mean, it wasn't huge, but it was something, right? So this one we don't trade. Why? Because it wasn't at a key level. And the other reason too, which I want to talk about, is that it was in the cloud. Okay, we don't trade in the cloud, right? We want to avoid that. All right, and that was the same thing with Roku. Now Roku didn't have confluence, so we wouldn't have traded it anyway. But it was also right in the cloud right here. So it just keeps us out of trouble. Okay, so see how this was in the cloud? Just avoid it, because there's so many algos that are using this cloud data that it is, look at, it was just like a triple fake out before moving. Now, granted, there was no confluence, there's no need to trade it, but it just the cloud will keep us out of trouble. Now that only applies for the common chart itself. Okay, so if there's a cloud, if you're seeing a cloud on the option chart, just don't worry about that. We're only looking for confluence there. Okay, and then for our entries, and then placing our stops. Okay, so from there, let's just take one more. I wanted to show that we can still use these within our 15 orb strategies. So we had John Deere gave a really nice reversal, right? And we looked at that at the open on Friday, and it went fast. It was a momentum move, right? That's what we do through these pre-market levels. And so we had a big push here through the pre-market box, right? So it was a big move up, and that was the momentum move, right? But what we did see is we saw a go bar right here through actually through several key levels. So this defined an important level to potentially scalp through what? The inside 15 high. Okay, so here's your inside 15 high right here, right between 945 and 10. So this one formed at 940, so it was right before the inside 5, but it gave us a key level to use. Okay, so we can trade these inside 15s. We can get more confidence in trading those in a direction by using these go bars. So I've had some comments from subscribers talking about, I mean, these, the 15 orbs are great, but sometimes it's hard to gauge, which way it's going to go. Well, these go bars give us a real great way to do it, and if we tune into the option chart, we can see that. So on John Deere, we just take a look here at the looks like the 145 calls. Give me 1 second. So let's see. So .de 190816 calls 145. Okay, so we'll look at this on the option chart. All right, so we had confluence here. Now it's still thinly traded, but it's still tradable because it was earnings day, right? So here is the bar, right? Here is the level, and this is what I'm saying for aggressive traders. You can find an entry here at a lower bar on the option chart only, right? So you can see a possible entry here from 378 all the way up to ultimately 578, so a 2-point move there, or just wait for the move through the level of the go bar, which is right here at 477 for a 1-point move, which is still quite good. Okay, so just want to show that is a is the methodology, and can be used within the 15 orb ranges. Okay, and then finally we talk about the go bar level. Basically using puts and calls. So when we go back to the NVIDIA, right? Remember I talked about the NVIDIA chart saying, oh, this is looking kind of bearish. Just keep an eye on it. We still need to see confluence on our put chart. And then it's also important to have your call chart pulled up as well. So here I said it looked a little bearish, right? And it did actually start to break down in the go bar. But if we go to the the chart on the puts at 1245 for NVIDIA, and I found the best comparable one were the 160s. So if we go to .NVIDIA 0816 puts 160s, and if we look at the 1245 bar. Okay. Where is it? Where's the 1245? There is no blue bar there. Okay, so there was no confluence on the put chart, so we wouldn't have traded that anyway. But if we go to the calls, right? And let's look at the we'll look at the 155s because at the time those were in play. So if we go to the calls, we can see at 1245 we had a go bar. Okay, and there in the aggressive trader could have got it right here at $2.88, right? Because only on the option chart, if you're aggressive, you look for that. Even here, there was a potential to enter right here, right? So, but again, it's aggressive, right? So you have to make sure you see what's going on the regular chart too, because here you would have entered and it would have only been like a 10-cent gain, right? And so, so just have to be careful with that. But here was the entry point right here. Okay, so $3.10. Or wherever it was, wherever you could get in, $3.20, right? It moved up to 342, so a quick 20-cent move, and it pulled back, right? But it never stopped out through the go bar wherever the stop would have been, just below those levels, right? And then ultimately this went up through, right? Cleared the cloud on the option chart, and then really went up from there. So that was $3 to almost $5.70. So a great move on NVIDIA. And guys, having this stuff in front of us and knowing how these work really, really helps. And so it'll definitely help our trading. And I updated the SPX plan for that. So I hope you guys find that extremely helpful. And we're going to start to see more alerts coming out using these throughout the week. Okay. Then from the newsletter, we just kind of went on. We went through earnings for this week. We've got Target, Lowe's. One of the ones I just want to mention real quick is Lowe's. Obviously, I don't trade into earnings unless I have freebie runners on options. However, what I do want to point out is that Lowe's, this will be noted later in the newsletter, is that Lowe's is looking good for a potential swing long after earnings if it has a good earnings report. Okay, so what we'll do is we'll look and see how it if it gaps up huge, we won't chase it. We'll just, trade our regular methodologies. But if it gaps up a little bit and we can catch a pullback off of good earnings, I would like to see a possible swing on that. So I looked at that as well. So we've got some earnings coming up on that. We go through the IPO, some of the IPO stuff, just kind of take a look at that. And then of course, we go into SPX. So let's take a look at that here. Okay, so SPX, we go through everything as usual. We take a look at the quarterly chart, so we can see here that the quarter is coming in a little bit. It's pushing in through this previous quarter. If it takes out last quarter's low, then it could get pretty nasty out there. Still, the monthly chart, we already looked at that, is pulling back. The weekly chart we looked at already is also pulling back a little bit. It does have a higher low here, but it did close below the prior week's low. The daily, again, same thing. We have the gap below, and we have a little closing gap above. So we're in a pretty interesting level right here. From there, we go on and we take a look at our clouds and kelts. So here we go. So the weekly chart, the weekly cloud, we're getting through this inflection point area pretty soon. A couple weeks to get there, but it could cause, or it could indicate potential changes in trends. So we'll see how. We'll definitely keep an eye on that to see where that brings us. We look at our Keltner channel on the weekly chart. Oh, we got that news pulled up there. Okay, so we look at the Keltner channel, the weekly chart, nice bounce off the lower Keltner channel, but still below the mid-Kelt. So that is definitely something to keep an eye on there. We looked at this at the opening of the video here, and we could see that we are getting back into the cloud right here, which does have bullish implications. We just have that gap below, so we have to be careful with that. We take a look at the Bollinger Bands. In a little bit, basically we're above the lower Bollinger Band, but all the Bollinger Bands are pointing down. Okay, so that's something to be concerned about. I'm just going to put the Bollinger Bands up here right now, so I don't have to click through the chart. So 1 second. So I'll just put that up here. I won't even change the colors just so you can see it. Okay, so you can see right here, see this is starting to point, even the upper Bollinger Band is starting to point down. So all are pointing down right now. So that also has bearish implications. So we just have to be careful. Both we're in an interesting market right now. So it's definitely something to keep an eye on. Next we have the daily Kelts right here. Everything is pointing down, so the recent trend is down. So I would be concerned about a hit here at this 29.10 level for a potential reversal, possibly to fill that lower gap. Elliott wave-wise is supporting a bearish argument still too. We can see that we had this sharp move down for the A, then we had B here, right? A, B, C. Okay, and now it looks like we might be working on a sharp zigzag move down here for C, or the impulsive wave down. And here, this could be 1, this could be 2. So if that's the case, we might see some sharp downside moves this week. So we'll see if that actually plays out or not. Let's take a look here at our regular daily chart that we like to look at. 1 second. Okay, so we are. This is our pitchfork level. So we are above the pitchfork median line, which is good, but there is an open gap there, so to be careful. And we have a resistance level here. If it gets over this resistance level, we could start to work our way to the top of the channel. Then we go over, our pivot levels, and then finally we get to our summary. Let's see if I can find the summary chart here. There we go. Here's our summary chart. So you can see the trend is still down. We have an open gap below here. Open gap here, closing gap here, and the trend still remains down. So it is possible if we can get above this downward trend line, then the trend can change and we can start working our way back up. But right now, we have to look for a potential continuation to the downside until proven otherwise. So good stuff there. Then we take a look at the VIX. We go over the VIX chart a little bit. I think probably right now all I want to do is focus on our cloud and see what's going on here. The main thing is the volatility of the VIX has been over 90 for quite a while. And even with this down move, it is still high. So we just have to be very, very careful here as we stay below, as we're below the cloud, but we're still not out of the water yet with that implied volatility being so high. We go through the NASDAQ, so let's take a look at the NASDAQ chart here. Let's go up to here. Take a look at the weekly NASDAQ futures. So similar, right? Similar to the SPX chart, right? So we're below the mid Bollinger Band. We are back in the cloud. There is no gap here on the lower side, so possibly the tech stocks will lead the way up. And then from there, of course, we look at our Keltner channel. Let's get over to that. Okay, weekly, and we compare that with our NARF stocks. Okay, so we're just below the mid Kelt on the NQ, and then we go to go through the NARF. So here we go. So Netflix is downtrending, guys. It is looking rough. We've seen it's still below its downward trend line, and here we can see the weekly Keltner channel. All the Kelts are pointing down, showing a downtrend. So again, until proven otherwise, Netflix trend is down. Nvidia gave earnings this week and wasn't too impressive, right? It came up to the mid Kelt and actually could be shortable. It's got ex-dividend coming pretty soon too. So we'll see how it works into that. It looks like it could actually be shortable kind of going into this week. Apple is the only one that, well, not the only one, but it is uptrending here, and it did hold its mid Kelt, so it's trying to hold on. So that is impressive. And then we have Amazon. Right, Amazon is starting to trend down now too, so it makes it kind of understandable that Bezos sold out billions. I wonder how much he really does know. Maybe it looks like the market really is going to go down, and they kind of just let him know, hey man, you might want to clear out some accounts and sell some stock, because if this thing goes back to 1,300, that could be really scary, right? Let's take a look. So Roku has replaced Google on the what used to be the FANG list is now the NARF list. Google just hasn't been tradable all year. So, and Roku, we've made a lot of great trades on it. And so here we have a nice topping tail on the weekly here, but still over the upper Kelt. So we don't want to necessarily short it, but it might just let the Kelts kind of catch up to it here. So, but it should still give some interesting trades intraday. So good stuff. So that is that list there. We're still seeing a lot of divergences on the NARF list, and so we'll kind of just kind of go from there and see if what setups we have and use our go bars. So let's take a look at the weekly on the Nasdaq. I'm sorry, the Dow. So Dow inside week, very interesting. Okay, and then it too does not have a gap below, but it is starting to work its way back into its cloud. So that is interesting as well. And then we go through the all the Dow stocks. We just kind of look and see how they did on Friday. And amazingly enough, despite the crazy week, they all finished green on Friday, which is pretty impressive. So we kind of look through a few of those, and then ultimately we get to what everyone's been waiting for is the trade of the week. And this week it's going to be Starbucks. So buy the drip, my friends. It is a still super strong move. Everything is green on it. The quarter, the month, the week, the day, right? And it is still holding this upward trend line right here. So every pullback on this has been buyable, and so we will look for setups. We will use our go bars 2 intraday to try to catch a initial swing, and we'll see what it does. If it pulls back maybe here to its 15 or below its earning low, that would be a great entry. We saw it had a nice doji over it here, which gave a nice move on Friday. So we'll look for some good entries on that. Plus, it's affordable too. The September calls are only 100. I think it's going to work its way up to $100 eventually. So if it could do it sooner than later, the 100 calls are only about $1. So that's pretty nice. So that'll give us something to look at this week. Should be great. So I'm looking forward to trading with everybody this week using our go bars. We should see more alerts and hopefully some great trades coming forward. So really looking forward to that with you. So I updated the SPX trade plan, and I'll be doing an extra video, just sort of a go-to video to explain just the trading methodology with the go bars. So enjoy the rest of your weekend, and I hope you enjoy the newsletter. And thank you again everybody for subscribing, and have a blessed rest of your weekend, and I'll talk to you guys soon. And remember your risk first and stay safe so you can stay in the game.